Hi everyone and welcome back to my morning report. Charts Appraisals on Thursday the 15th of October with me, Richard Perry, market analyst at Handset Markets. Moving on to Euro Dollar, and we've had this strong rally on Euro Dollar in the last week or so, last couple of weeks actually. Big strong move actually again yesterday, and big green candle that we had. 1489 break above the 1465 level. That 1465 level I've seen as this sort of overhead resistance. Pretty much marks the area which the selling pressure starts to come in. Yes, we did have that spike higher in August, but certainly other than that, each of the times that in the last sort of 6 months, really each time that the euro has rallied, it's sort of failing around this 1465 level. Now the big question is this going to be the time it breaks out? Well, it's closed above 1465 and it's sort of looking more positive, I think, on the momentum indicators. The RSI getting to sort of the mid-60s. The stochastics much more positive. MACD line is also turning up. Now, we've had these comments from Edvard Novotny today. And they've sort of... it's jawboning again, isn't it? If you think about it, jawboning the euro lower. Effectively, it's sort of saying that the ECB has to do more to sort of push towards its inflation target. Again, I don't think it's to be unexpected, really, as the euro gets towards these levels, and it's the one thing that sort of prevents me from turning bullish on the euro is the fact that you just know that every time that the euro starts to get a bit of traction against the dollar, it will start to, I think, induce these comments from the ECB members, and what we've had today is pretty much in keeping with that. Now, technically speaking, yes, you would say that you're pretty strong. You'd need, ideally, I think you need to see a 2-day close above 1465 to really sort of suggest that arguably on a technical basis we're going to be moving towards 1710. Now these the tendency for ECB members to jawbone the euro lower is something that sort of holds me back from turning bullish, so that is a little bit of an issue. But I mean, you do have on a technical basis this move that we've had, and ultimately you need to stick with that trend. The trend is your friend until it ends. Here we have on the hourly chart. Let me see what sort of trend you can get in. Yeah, it's a pretty good one. Pretty good one. You're not too bad there. That's last sort of week or so, couple of weeks almost. So the bottom of that trend comes in around 14 figure. Interesting that that happens around that sort of breakout resistance at the moment, old breakout resistance, which became new support. So around that 14 figure level is around about where we start to see the support coming in. 1350 is this reaction low here, around those levels. So 1350 and 14 figure, the two sort of fairly key levels near term. About 50 pips above that support at the moment, and that was that candle. If I zoom in, that was the candle on Novotny's comments, which saw the euro spike lower, but started to find a bit of support again since then. But I still think that you've got to sort of be backing this one on a near-term basis until you start to see the trend breaking down. And these dips are a chance to buy. Again, I would stress though this is near-term trading, because I think you're sort of getting to the realms at which you will start to see sort of jawboning from the ECB. But I think in the near term you've got to stick with the trend on a technical basis. So buying this little dip in euro, because if the last 2 weeks are anything to go by, the euro's been pretty strong, the dollar's been pretty weak. You got US CPI out this afternoon, that could certainly have an impact on this chart. But in front of that, I would certainly be happy to remain long of the euro on a near-term basis. Anyway, I wish you good luck in your trading today, and I'll speak to you later.